Honey, interest rates are over 5%. They're touching 6%. Babe, there's inflation. There's a recession coming. What do we do? Do we buy? Do we sell? My friends, chill. We're going to touch on all of this in this episode of Real Estate with Rolly. So maybe you've been thinking about selling your home, and with all the dust in the air and buzz around a slowdown, you might think we should hold off. Maybe we should rent out our property. Or maybe you're a buyer who has been through the gauntlet of bidding war after bidding wars, getting beat over the head, losing every single time. Now you're thinking, shit, if there's going to be a slowdown, maybe I should just wait a little bit longer to see if prices drop. So let's take a look at the previous housing bubble. And we had touched on this in previous episodes. This time is not like then. The current state of this market is completely different. In 2008, inventory exceeded demand once the bubble burst, but in this market, inventory is chasing demand. So as long as the demand outpaces supply, the market should remain stable. Think about when you're driving down the shore and you're going 80 miles per hour and then Waze alerts you of the police presence ahead and you slow down to 65. And even though it feels like a snail's pace, you are still going along at a normal rate of speed. You didn't stop. So regarding the recession, I definitely believe it is coming. It is on the horizon and will be here. So how has recessions impacted real estate? In 8 of the last 9 recessions, home prices increased. And in each recession, mortgage rates came out lower. So last week, we witnessed the typical steps the Fed makes with raising the rate to take money out of the marketplace in an attempt to reverse inflation. And there are still great programs available right now in the jumbo market. And as we look down the road, there will be great opportunity to refinance at a lower rate. So remember this, you marry your home, but you date your rate. Overall, we are experiencing a normal market. Supply and demand has created this hot seller's market we saw, having tons of buyers chasing supply. And that's what we're experiencing now with inflation in our everyday living, and it's going to hurt a bit. But when you're looking to buy a home, your mortgage payment does remain the same versus renting, where it keeps increasing. And I'm sure you've noticed over the last year, rents have gone up 24%. So sticking it out as a renter is going to be painful. We are expecting gains of 6 to 7% this year in the marketplace, 3 to 5% next year, and another 1 to 2% in 24. So if you're selling, you are still in good position. And if you're buying a home, yes, your rate is higher, but you can expect to pay closer to asking and possibly under. And this balance will keep you closer to your monthly payment goal. And again, you date the rate. We are expecting mortgage rates to climb into the mid-6s and probably ceiling around 7%. And as the Fed is raising rates to slow our economy, when this happens, typically mortgage rates will drop. Nobody has a crystal ball and can predict where home prices will be in 5 years. But based on population growth, new homes being built, we still have a huge demand and are undersupplied. So just because we went from 80 miles per hour to 65 miles per hour doesn't mean we stopped moving forward. And you can be comfortable tomorrow with the home you purchased today. So if you were thinking of selling your home for 1.1 because your neighbor's home sold for 1.0, sorry, but we are not in that market anymore. But we do know that a lot of buyers are still lining up to buy homes, and there are not enough homes to go around. So who you market with right now really matters. And if you are thinking of buying, this is not crash and burn moment. This is a window of opportunity. Some are going to sit on the sidelines later just to kick themselves for waiting as rates continue to increase along with pricing increasing. Money is still cheap to borrow. When I started in real estate, a good rate was well over 7%. So talk with your loan officer, see what programs are available for you in ARMs, in the jumbo market, and put together a game plan for down the road to refinance your home. This is just my take. If you have a different opinion, agree, disagree, awesome. Let us know. Let's get a conversation going in the comments below. And as always, thank you so much for watching. Comment below. Don't forget to subscribe, and cheers.